daily chart, we've been in a tight bull channel for mini bars. And then we sold off from the June 2nd high, breaking below the May 19th lows. Because the daily chart's been in a fairly tight channel, the odds favored sideways trading. And now we're starting to form a triangle. We're getting lower highs, we're getting higher lows, and it's basically breakout mode. I still think the odds are we're probably going to get a second leg up and test back to the June 15th high over the next several bars, and we'll probably get to the all-time high and test 7,700 over the next several bars. We can easily test back down to the low one short right here. Tight trading range in the middle of the range is the worst location to really do much of anything. And that's because the probability is fairly close to 50-50. Then you'll have bulls buying, scaling, and lower, betting that will probably get a bounce. The downside potential is probably limited below the June low. There's probably more traders buying down here rather than selling. 5-minute chart, we had a fairly large gap down on the open. And when we get a large gap down, it increases the risk that the market will go sideways. So fairly large bear bar, or bear breakout, gap down. And then we had a bull reversal bar closing on its high with bar 1. That's a strong enough bull bar that we'll probably get at least a small second leg. Traders can buy it, put a stop below 1, betting that we'll rally back to the moving average. 2, we have consecutive bull bars, 1 and 2. That increases the odds that we'll probably get a second leg. And then 3, now we have 3 consecutive bull bars. Good for the bulls. Probably buyers and at least a second leg up. 4, strong enough bull bar closing on its high. I suspect the first reversal down is probably going to be minor, so still probably buy the close. We had a breakout of these 3 overlapping bars. That breakout point will become support. Bar 5, follow through for the bulls. Good for the bulls, probably buyers below. And then 6, we have outside up. Because we're starting to form since we're starting to form overlapping bars, that increases the risk that traders will start taking profits above bars and start buying pullbacks. We may start getting tails above bars. 7, bull bar with a tail. Strong enough bar, probably traders buying the close, buying a 50% pullback, betting on a bounce. And then 8, now we have another bull bar, starting to get climactic, closer to the moving average, but I suspect we'll probably go at least a little bit higher. 9, another bull bar. Good for the bulls, but the risk is getting fairly large, and that increases the odds that we'll probably get a couple of legs sideways to down soon. And then 10, even smaller bar, probably going to pull back. 11, outside down. Outside down. Not a great bar for the bears. Outside bar with a tail below the bar. Probably buyers below, but I suspect sellers not far above. 12, high one buy, but fairly late in the bull trend. That increases the odds that there's probably going to be traders selling above the 12 high, and I expect we'll probably get at least a small second leg down. 13, outside down, good for the bears. Probably going at least a little bit lower, but because the channel up is tight, I suspect the downside potential is probably limited. And then the bulls tried to rally and form a bull bar closing on its high, and instead we got followed through on 14. 13 and 14 consecutive bear bars, good for the bears. Probably going to get at least a small second leg down. And then 15, a pause, probably sellers above. 16, doji, not a great location to be selling. Right at the breakout points, probably going to bounce. But then instead of bouncing, we started going sideways. 17, breakout pullback sell, not a great sell, it's a low one short. And instead of finding buyers below, we started forming dojis, not a great buy above 18. 19, outside down, bear bar closing on its low, possible endless pullback. Whenever you get a rally, you start to get a tight channel against it. That increases the risk that you might be forming a trading range. Plus, with the gap down, we have a big gap down, big rally. This might be an entire parabolic wedge in a bull leg and what would become a trading range. 20, 19, 20 consecutive bear bars, good for the bears. Probably going to go at least a little bit lower, but I suspect the downside is probably limited. And then 21, bull bar, not a great buy, sellers above. 22, outside down, good for the bears. And then 23, follow through, but now we're getting a bear breakout below the bear channel, and that increases the risk that we may end up going sideways here. 24, doji, good for the bulls. increases the risk that we'll probably find buyers near where we are, and that increases the risk that we'll probably get some kind of bounce. 25, bull bar, bouncing. What are the chances that we go straight up? We probably won't go straight up, but if we start to go sideways here, that's trading range behavior late in a bull channel, and that increases the risk that we are going to pull back. 25, outside down for an outside bar late in the bear channel, near support, the top of bar 2, the bottom of bar 4, this area over here. Probably more traders buying than selling. And then bull bar 27, second entry buy, good for the bulls. Okay, swing buy above 27, stop below 27, betting on at least a small second leg up. 28, doji, probably buyers below. And then 29, bull bar, closing on its high, good for the bulls. As far as bears selling it, I would not. You're fairly low in the range after a fairly strong rally up to bar 10. That increases the odds that the market is probably, that increases the odds that we're probably going to go sideways to up. And the bulls who bought up here, buying more lower, probably will make money. 30, doji, probably buyers below in a second leg up. And then 31, good bull bar. Now we have a breakout. 31, following the bull bar. 29, that's good for the bulls. Increase the odds that the first reversal down is probably going to be minor. Follow through. 32, now we have consecutive bull bars. 31, 32. I suspect buyers below in a second leg up. 33, another bull bar. But a little bit of a parabolic wedge. Rally 27, pause 28, rally 29, pause 30, and then a buy climax. 31, 32, 33. It increases the odds that we may start to go sideways here. Bull bar or bear bar 34, but probably buyers below. And then breakout pullback buy 35, good for the bulls. But I suspect the upside's limited. And then 36, doji, not a great sell, buyers below. We got a bear bar 38. But as far as selling it for a second entry, I suspect there's probably more traders buying and we'll probably try and reverse up. 40, bull bar closing on its high, good for the bulls. Second entry, probably going to go at least a little bit higher, 40, and then, 38, then 39, bull bar breaking out of the tight trading range triangle, good for the bulls, but getting near resistance, an area where the bulls got trapped. And 40, bear bar, but probably buyers below. Doji 41, still probably buyers and a bounce. And then we tried to rally 42, got a second leg down 43. But now we're at the bottom of this tight trading range, and there's probably traders buying around where we are. 44, bull bar closing on its high, good for the bulls. Increase the odds we're going to go at least a little bit higher. And then 45, we have a fairly large bull bar overlapping the tight trading range. That's not a great buy. Not a great buy for the bulls. 45, not a great sell either. So probably sideways. And 46, pulling back. But I suspect buyers below after 44 and 45. And then 47, bull bar closing on its high. Now we have an expanding triangle. 1, 2, 3. Then one push down and a second push down. Increase the risk that we go more sideways to down here. Bear bar 48, not great for the bulls. And then 49, we have a high one buy, but forcing bulls to buy at the top of the range. 50, we have a second entry sell. Good for the bears. But I suspect the downside is probably limited because we have a second entry sell at the top of a trading range. It could lead to a lower high and a sell-off. Follow through 51, good for the bears, and then a bull bar 52, but not a great sell. Probably buyers, probably not a great buy. Probably sellers above, and then we have that surprise on 53. Strong enough surprise. Odds are we're probably going to go at least a little bit lower. 54, consecutive bear bars. 53, 54. Probably going at least a little bit lower. And then 55, bull bar, good for the bulls, but not a strong bar. It's testing the breakout point 44. And that's a sign that bulls who bought scaling in lower, trying to get out, break even. And then we got a second leg down on 55. For the bears, consecutive bear bars 53, 54. I suspect sellers above and a second leg down. But if we start to go sideways here, the bears may lose energy and the bulls may start buying. And that's the risk that the bulls face. And then 57, not a great buy for the bulls. 58, a bear bar. That's good for the bears. Increase the risk that we may go at least a little bit lower. And then not a great buy above 59. And then 60, bear bar, followed through 61. Looks like we're breaking out below this bear channel. 62, 3 consecutive bear bars, we may go at least a little bit lower and test down to this area, which we did on 63. 63, strong enough bullet bear bar. We may have to go sideways, but a sell climax bottom of the range. That's really not a great location for the bears to be selling. 64, bull bar. Always in bears, probably get out, bulls will buy. And then outside down 65. But I think probably more traders buying below 65 rather than selling it. And then 66, bull inside bar, good for the bulls. Reasonable to expect a bounce and a test back to the middle of the day's range. 67, good bar for the bulls. Strong enough bull bar, probably buyers below, and at least a second leg up. And then we pulled back on 68, but 68's a bear bar, probably buyers below and a bounce. And then 69, doji, not a great sell, probably buyers below. 70, we have a second leg down after 68, bear bar 68, pause, second leg down 69. The second entry sell, but probably buyers below. And then a bull bar on 71, good for the bulls, probably going to get at least a small second leg up. 72, bull bar 72, but I suspect probably buyers below, scaling in lower. And then 73, we try to get a buy above, but really not all that great of a buy signal bar. 74, bear bar, closing on its low, good for the bears. We may get at least a small second leg down, testing the bar 70, bear bar, and then 75. Not a great entry bar, but probably sellers above and at least a small second leg down. And that's what we got on 76. 76, we have a second leg down after 74, but tight trading range, breakout mode, not a great buy, 76. And then 77, strong bull bar, closing on its high, but a possible failed breakout of this triangle. And obviously we got the reversal down. For stop orders, you can buy above 1, you can buy above 2. You can really buy above any of these bars. And at some point, when you start to get this many bars up, you got to look to the left and you got to say, okay, if I'm a bull and I'm long, where's my stop? Is my stop at the 6 low? You know, arguably 6 low is reasonable. But if you put a stop at the 6 low, what's the probability that the market's going to go all in some kind of measure move up from the 10 close to 6 low? It's probably not going to happen, and then increase the risk that we're going to go sideways. And then at some point, when you start to see 11, 12, 13, and 14, 13 and 14, we have consecutive bear bars. Traders will sell, stop above the 13 high. It's a strong enough bear reversal and follow through that there's added risk that this is a trading range now. And if it's a trading range, where's the bottom of the range? Well, the bottom of the range could be all the way down here at the 6 low. It could be any of these breakout points. And you can see the moving average. We're below the moving average. So this is actually a little bit dangerous for traders to buy. Doji, 15. Now we have 3 consecutive bear bars. That increased the risk that whatever reversal up we get is probably going to be minor. And then 16, another bear bar. Now we have another bar in the micro channel. It looks like we're going to bounce. And instead of bouncing, we started adding to the bear bars. 19, bear bar, closing on its low. Good for the bears. I suspect we're probably going to get at least a small second leg down. Now, if you had to pick, what direction makes the most sense? Do you buy or sell? Well, if you buy, where's your stop? Do you put it below 6? Do you put it below 3? Do you put it below 4? Do you put it below 1? You can, but one of the problems with that is what's the risk reward on the trade? So if I buy at the market here and I put a stop below 6, that's reasonable, betting that will form a higher low and test up here. But you know, risk, the reward is significantly greater than the risk. And therefore, you know it's low probability. And if I do the opposite, let's say I sell below 19, stop above the 19 high, or stop above 17. If the market ends up selling off all the way down here, I stand to make twice my risk, if not more. And if there's a 50% chance of that happening, then you know the odds are pretty good. 20 consecutive bear bars, 19, 20. Good for the bears. Well, I've already talked about that. Anyways, I think it's okay to sell here. Now here, same thing. If you're selling down here, the risk is big. So if you get a bull bar closing on its high, it makes more sense to exit. Because at some point, one of these bull bars is going to lead to a successful reversal. And then 27, I think it's okay to buy. Stop below 27 or 24. And then always in bulls, it's reasonable to buy betting on a test up here. I talked about that. And as the market starts to go sideways, probability is getting very close to 50-50. And at some point, I think you have to be concerned about the possibility of a bear breakout. Bull bar, if bears are short for any reason, or if bulls are long, I think they can stay long below 43. Bull bar 44, good for the bulls. And then we got the upside breakout 45. They can be long, and then no reason to sell below 46. But then below 48, I think you have to get out of longs. It's reasonable to sell. And same thing, bar 50, probably an okay sell. Top of a trading range, at least 40% chance you're going to make twice your risk. And twice your risk is the bottom of the trading range. So it's pretty good math on the trade overall. And bears can sell below 53, stop above 53, betting on a measure move down, or they can wait for follow through and then sell the pullback. That's probably okay. But this is really hard to stay short when you start seeing this. But the channel's tight, and that lowers the probability that bulls will buy it. Can you sell below those? I would not. And then always in bears, get out above 64. Bulls can buy, and then bull bar 66, second entry buy. And then I think it's okay to buy, but then do you get out there? You probably do, and I think it's tough to buy again. Maybe you buy above 76, but that's really too late in the day. Limit orders, you can basically buy below anything. Buy below 6 for a second leg up. That makes sense. Sell above 12, probably okay. It's a bad stop order buy. And if you think about it, buying above 12, stop below 12 is probably low probability. And therefore, there's probably sellers above. But it's reasonable to think that there's buyers not far below. And then when you got the bear breakout 13 and 14, bear breakout 13, follow through 14, probably a second leg down, likely. At least 50% chance of a second leg down. So you really can't stay long there. What I mean by that is, at that point, when you have consecutive bear bars, selling stop above here, I think there's probably a 50% chance that we could go all the way down here. And if that's the case, then you can't hold long at that point, because what are you going to risk on that trade? Odds are sellers above before we get down there, so the bears have the advantage. And then obviously the bulls tried, and the bulls started giving up. Sellers above, probably okay. The 16 high, I thought buyers below 25, buyers below 26. I thought buyers below 33, buyers below 34. And then I thought buyers below 41, 42 for a bounce. I thought up here, I think it's tough to sell when you have that magnet, and then probably sellers above 55 and the breakout point. But I think that's tough to see because the signal bar is small and you get a sharp reversal. And then bears tried to sell above, but they never got filled. And then I thought buyers below 64, buyers below 65 and a bounce. And then I thought buyers below 69 for a bounce. Then we entered a tight trading range through there. Buy the close, sell the close, probably buy the close 9, 10, 11, 12, buy the close, and then sell the close down here, maybe for at least a bounce and a small second leg down. But I think that's fairly tough. And then probably buy the close 29, or buy the close 30 for a second leg. Maybe sell the close 54, scaling in at the breakout point for a second leg down. But that looks easy in hindsight, but it's really tough. I think one of the most important things when you're trading is most people end up using too wide of a stop, and it ends up killing the math on their trades. And what I mean by that is, if you find yourself having a lot of situations where you'll take 3 or 4, 5 good trades in a row, and then all of a sudden there's one trade that just wipes everything out, and that's happening repeatedly, usually that means you're risking too much. And if you look at a lot of your trades, the good ones typically don't pull back all that far, and they usually respect swing points. That's why I think most traders are far better off focusing on trying to get twice their risk and really focusing on the trades where they can get a more than twice. They can at least try and achieve twice the risk on a given trade. They're probably going to have an easier time with those trades. And that's why stop orders are so beneficial. Let me take a look at questions. As far as tomorrow, where do we go? I suspect that as far as selling below this bar, I think there's probably more buyers down here than sellers. And so we may end up getting a bounce, but these breakout points are likely magnets. And so it's reasonable to think that we'll probably test back up to these lows fairly soon. I think probably buyers below today's low and at least a small bounce. But there might be sellers in the upper third of the bar. We still may have to test back all the way back down here. Okay, let me take a look at questions. Okay, question, Brad. When you know the market is likely to pull back after a strong sell-off day like this, you buy during the Globex so you can sell them off the next day? Not typically, but I'm trying to think about what you're saying here. When you know the market is likely to pull back after a strong sell-off day like this. Oh, I see. Okay, I see what you're saying. Basically, what you're asking is when you have a sell-off and you think there's going to be buyers, do you hold during the Globex session? Sometimes, most of the time, not. Basically what you're saying is if you think this is going to be a weak sell, so if you think it's a weak stop order sell, you can look to buy it and just do the opposite. So buy down here, betting on a bounce. And it's reasonable. I mean, the odds are there's probably more traders buying down here. But for me, I'd rather stay fresh and wait for tomorrow. Question, someone said, I think you said bears cannot sell above 54. Why do you say that? Not sure here. Yeah, I may have misspoke there. I mean, what I was saying is I thought selling above 54 was a little bit dangerous. It's a bear breakout, and of this triangle, it's got follow through, so the second leg down is likely, but it's possible this is the second leg down. And therefore, what do you do if maybe you sell here and then you get a small second leg down? What do you do if 57 is a strong bull bar closing on its high? You probably have to get out of your trade. In this case, we formed a tight channel and just continued to drift down. That's what I meant. All right, so it'll be interesting to see what happens tomorrow. I suspect probably disappointment after today's bar, but we'll see. All right, thanks everybody, and I will talk to everybody later on.